Earnings season continues to unfold. There are 11 S&P 500 stocks reporting earnings on Thursday, January 22nd. So let's take a look at them. We're going to dive into price action, market timing, and momentum because I'm here already, and that's what I do. So let's start with GE. Now, GE, this is GE Aerospace, okay? They have got a nice little uptrend going, and this is supported by the December 31st range. This looks like a stock that might be providing a buying opportunity soon while it holds that December 31st low, especially because the RSI Power Zones are holding bull support. MKC, this is McCormick. This stock is trying to reaccumulate, like form a base, but it's not doing so very successfully. So I would stay clear of this one unless it has a clear ability to post a daily closing break above the $70 price level. PG, Procter & Gamble. This is also attempting to form a base, but this is more of a trend change as opposed to a reaccumulation. And so if it can continue higher above the December 17th high, then there may be an opportunity. But right now, that is not on deck. In fact, there's a momentum pattern suggesting potential resumption lower, and that would be confirmed with a move below the January 16th low. HBAN has been putting in new recent highs, also over its November 2024 high. This is after the RSI worked off overbought conditions, but this current situation of higher highs but still kind of tight lows makes it a little bit risky to buy in a breakout. It's a low price stock, but I'd still suggest waiting for a potential return towards the January 14th low before adding to positions. NTRS has broken out from a wide base and is remaining higher while above the December 31st low. I think that if that stays the case, then buying on pullbacks is not a bad idea. ABT, Abbott Laboratories, this stock looks distributive. So accumulative and distributive are really fancy words for our institutions buying up shares, that's accumulation, or our institutions slowly but surely selling their shares, distributing them out to all of us, right? The spec folks. So right now, this is not looking great. I would steer clear of any long action. If you are short, then I would say your downside target is the January 2025 area around 115. FCX, man, this thing is up and away. Look at how overbought it got so many times, but right into the bull resistance power zone. That's why I love the power zones. Now, little special announcement. If you have not joined my 4 zones RSI coverage system, this is the season to do it because I'm reteaching the whole thing live next week. Yes, I'm giving it an update it hasn't had in 5 years, and I may never do one again. So that's your chance to get it fresh, taught from me live. Ask your questions there in the moment. So keep an eye on your email for us opening the doors for that if you're not already in the system. If you are already a 4 Zones RSI member, just stay tuned. We'll get you the Zoom links, we'll get you the announcement and more. Okay, that being said, alongside my love for the RSI Power Zones, we can see that this stock is pushed higher. Now, if you're already long, cool. I would trail your stop below the January 16th low at the closest or further back. If you don't have a position, this is one that is pretty overbought. I would wait and see if a pullback occurs. Again, earnings may fuel such action. All right, INTC, good old Intel. Here we've got a great move higher since December 26th. It's not returned to the bull resistance power zone yet, which is a good sign that there's still more room to run. With the earnings that may fuel action, but based on the current trend that I see here, next upside target is $60 a share. All right, CSX. Now, this is a stock that has been going somewhat sideways, though it keeps poking up a little bit into the new highs. The fact that it's not able to close decisively above that August high makes me less excited about it. I would stand back and wait for it to be able to really clear even the $38 level before thinking about buying shares of this stock. All right, COF now had a gap recently, and that may have been news fueled. The earnings are tomorrow. But look at how it's come back to the old tops. The previous resistance now becomes new support, and it's in the bull support power zone. So there may be an opportunity here to buy. I think while it stays above $220 per share, could be one to look to go long, depending on how it reacts to earnings. All right, last but not least is ISRG, Intuitive Surgical. Now there's a big old gap that it's trying to work on filling that occurred back in October. But this stock also has a lot of gaps. So keep that in mind. When a stock has a lot of gaps, then they become a little less significant. It's like the boy who cried wolf, right? There's a gap, we must fill it. Well, not all of these gaps got filled completely. But this is a large gap. So I do think it's a little bit more prominent. It looks like it wants to keep pushing down. If it continues asserting itself below the October 22nd low, then I think the middle of this gap is an area to watch for a downside target. All right, so those are the stocks that are S&P 500 components reporting earnings on Thursday, January 22nd. If you found value in this video, some ideas for your portfolio, or lessons on especially reaccumulation and distribution, go ahead and hit that like button, and I'll catch you in the next video. And hopefully in my live reteaching of the Power Zones RSI coverage system next week.